Get Rich Slow with John Wolf. Hey, today I'm going to talk to you about the big do's and don'ts, whether you're pre-qualified, already in contract, or we're working together on a credit repair plan so you can be pre-qualified and get into contract. And again, everything I'm going to show here is general. So if we talked about something specifically, of course you can still do it. And if it's part of the plan that I wrote down for you, please still do it. All right. The first thing is don't enter into any new debt payment plans. I don't care if that is a mattress loan, car loan, whatever. Don't do it unless we talk about it first, because that can torpedo what we're trying to do on your home loan. Do pay all of your bills in time, and unless we talk otherwise, just make the minimum payments. It's really important that we don't miss anything, because one late payment can cost you a ton of money as we're closing on a house. Don't pay off any debts or collection. It's actually really important where we source the money that you paid something off with. So don't do it on your own. If we're going to do it, it'll be part of our plan, and I will specifically direct you how to move the money from point A to point B. Do keep all your personal documents in one place. Buying a home, the whole process from pre-approval to getting in your house might be 90 days, might be more. Keep all your personal documents together. As you get new pay stubs, keep that with it. It'll just make the whole experience smoother if you have everything in one place so you can send it right in when you're asked for it. Don't start spending more on your credit cards. So this is important. You might have 2 or 3 credit cards already. If you normally only owe a few $100s or a couple thousand, don't charge that up to $6,000, $7,000, $8,000, $10,000, because that will potentially affect your credit score, but more importantly, it'll affect your debt to income ratio. Do keep me informed of any life changes. So I need to know if you're moving, changing jobs, getting married, all the good things, possibly some of the bad things there too. But that'll just help me keep us on track on our plan. Don't change jobs. I've actually had 2 loans almost die because the clients quit or changed jobs when we were in contract. It is totally possible to get a home loan when you've just gotten a job or even before you've started, but the process is a little bit different, and we want to take that into account ahead of time. Do line up a homeowner's insurance policy if we're in contract, because that's one of the things that has to go into the final loan approval. Don't close any credit accounts. If you close a credit card account, even if you didn't owe any money, it is going to affect your credit score, and that might increase the cost of your mortgage, and I don't want that to happen to you. Do contact your 401k retirement fund administrators to see what are the rules for you taking the money out, how long does it take. That's some really important stuff we need to know early in the transaction. Don't finance or charge any new debts. Again, no new cars, no new credit cards, all that good stuff just needs to wait till after you have closed on your loan. Do talk to your friends and relatives who are providing gift. Make sure that they're on board, understand what's going on, and understand when they need the money. And please have them call me about how we should be moving that money around. Don't co-sign on any loans. If you co-sign a loan, you are 100% responsible. It 100% affects your credit and your debt to income ratio. Do talk to your realtor about what your needs are and what your budget is. Even if we aren't quite done with our credit plan, it's okay to be looking and trying to figure out what the best neighborhood for you is that way. Don't move money around. So for a lot of loans, it's very important where money comes from. The federal government directly or indirectly subsidizes loans, and they are very, very concerned about where money comes from. The basic piece of it, and it's different from situation to situation, but basically, if you're going to use money for down payment, closing costs to pay off any debt during a transaction, I have to positively prove that it's not drug money, which means it can't have just shown up in a cash deposit or something like that. Or if you got a check, we have to show where the check came from, how that money was sitting for the last 60 plus days. Do research while you're shopping before you've actually picked a home on taxes. I'm talking about difference between property taxes and income taxes in different areas. I'm here in Portland. A lot of my clients are in Vancouver. There's a huge difference in what you pay for income taxes if you live and work in Vancouver versus you live and work in Portland. Even though you can cross the bridge in 4 minutes, there's, for a lot of people, a 10% difference in the amount of money they take home. Regulations can be really important too, especially if you're planning on renting your home in the future. And school districts are just always important to many of my first-time home buyers who are raising families. Don't miss any payments or overdraw any account. So I want to express that this is both bank accounts and any kind of credit account. And I mean being late on things and also going over your maximum balance on credit cards. Alrighty, so those are the major do's and don'ts if you're looking to purchase a home soon and just want to stay on a plan we're already on. That's kind of your basic guidelines. If you have any questions, put them in the comments, like, share, subscribe my video if you think they're any good. And I support my family by doing home loans in Oregon and Washington. Feel free to get a hold of me if you want any help in that account. Have an awesome day.